Hello, this is Jordan, and this is your Precious Metals Market Update. This video is being recorded on the late evening of Thursday, July 14th, 2017. Thank you so much for joining me. And in this video, I'm going to discuss why the primary trend for precious metals is now down and why we should expect lower prices in the weeks and months ahead. And starting off here, we have the daily line charts for gold and silver. For gold, we also plot the 200-day and 400-day moving average. And as you can see, gold recently broke its 2017 uptrend. That red line we show there connecting the three major lows since January. And the underside of that trend line comes into play around 1230. And if you look at the moving averages, they're at 1234 and 1240. So gold could snap back to 1230, maybe a little bit higher, but that's where there's a lot of resistance and where gold could roll over again. And gold, several days ago, it did become stretched on the downside. Some sentiment indicators were showing some extremes. And in addition to that, if you go back to early 2016, you can see that 1200 was a level where it rebounded from several times. I mean, not exactly 1200, but in that 1200 to 1210 range. So what I would look for with gold is it could rally a little bit more, but eventually roll over, probably test 1200 again. If it breaks that, then it's very likely to retrace the entire rebound that began since December 2016. Now, silver has been leading on the downside, and silver has just been a mess technically. I mean, this is very bearish. The action this year, it obviously looks corrective, and if you could do a measured target where if you look at support at 16, and the highs in spring at nearly 1850, you could get a measured move down to about 1350, testing the lows there in December 2015. And so silver became very, very oversold, more so than the miners or even gold in the last couple days. And so it's rallied, it's snapped back to major resistance around 16. But if you look at silver compared to the 200-day moving average, it's still quite a ways below that. And so some gap there will remain, but silver, I would think it could consolidate for another week or two, perhaps, to work off the oversold condition before it continues lower. So it's definitely looking very weak, but it's also oversold at the same time. Not a pretty picture for precious metals. And here we're going to talk about gold in real terms. I mean, how it's performing if you strip out the US dollar, and we plot the main two things we look at are gold against foreign currencies and gold against the stock market. And we've done videos in recent years, and so many times we would talk about how gold was holding up well against the stock market or gold was showing strength against foreign currencies. Unfortunately, it's the exact opposite. I mean, these charts are very weak. Gold against foreign currencies it's lost both the long-term moving averages. Look at that blue arrow there. Lost the moving averages. It broke down from a really ugly head and shoulders top. And I mean, that projects to another 7 or 8% downside. And I mean, if that happens, it would be trading at basically an 18-month low. So gold against foreign currencies is very ugly right now. And gold against the stock market, we flipped the chart around so you could see. I mean, look how bullish that looks. It's consolidated for 2 years. And so that's the stock market divided by gold. And so that's on the cusp of another major breakout. And that tells us that the stock market is likely to continue to outperform gold, strongly so in the months ahead. So the picture for gold, I mean, look, gold has been very weak in recent months in real terms. It's just been the dollar weakness has been holding it up, and so that's what we're reiterating that in this chart here. And look, stocks against gold, there's still a long-term negative correlation there. It's been in place since summer 2011, and I think it will continue to favor the stock market. But I do think that at some point next year we're going to see that flip and flip big in favor of gold. But again, not right now, not anytime this year, unfortunately. And gold being weak in real terms, that's really a reflection of the negative fundamentals that really shifted at the beginning of this year. We can say in February or March, to be precise, because that's when real interest rates bottomed, and real interest rates have risen by 0.9 or close to 1% in recent months. So that's a negative fundamental change for gold and precious metals, and we're seeing that reflected in the worsening charts. Now, this is sentiment because obviously with the market selling off, you know, the bulls are going to talk a lot about bearish sentiment and we're going to get a big rally and because so many people are bearish and et cetera, et cetera. But we have to caution you and remind you that markets move on fundamentals. Now, technicals measure supply and demand, and sentiment covers money flows and helps you figure out how far markets can move. You know, how far can the trend move before things really get exhausted? And so you have to look at the trend of the market and then analyze sentiment with respect to the trend, because if gold is in a bull market like it was in 2016, I mean, look at the COT there. Look how, and we measure the net speculative position as a percentage of open interest. I mean, look how high that got. That got very, very high, close to 60%. I mean, it started all the way at 0 in December 2015. And so in February, there were people who were worried about the COT, but they were really applying bear market parameters to the COT. And so that was a mistake that they were making. And likewise now, if you're thinking sentiment is suddenly really bullish for gold, yeah, it might be for the next week or two, but what this chart shows is the COT, when gold's in a primary downtrend, the COT, the rallies have begun. I mean, we're talking about multi-month rallies. They began with the COT around 5% to 15%. So the COT last week is at 23%. That's the lowest in more than a year, which is encouraging for gold, but the problem is it can go much lower before gold really has a sustained rebound within the context of a primary downtrend. And I mean, this is something I learned in 2012, 2013. Sentiment was getting really bearish, and I was looking at the COT and saying, oh, it's at a 1-year low, it's at a 2-year low, it's at a 3-year low. But I wasn't, you know, this is something I learned because then I wasn't focusing on the fact that the fundamentals of the market and the price action were bearish. The market had reversed and gone into a downtrend. And when that happens, sentiment can get really, really bearish and has to hit real extremes on the downside before you get a sustained rebound. And so what I'm showing here in this chart is we don't see that yet based on the COT or the put-call ratio, which you know, I've drawn here with vertical lines. We can see sometimes in the past when gold has had pretty decent rebounds, again, within the context of a primary downtrend. And we can see that, you know, with respect to the rate of change indicator at the bottom, the 50-day rate of change, you know, usually it's minus 10%. You know, in addition to the 5 to 15% with the gold COT, and right now it's only at minus 3%. So gold, I mean, we have gotten a little oversold, and we are getting a little bounce here, but sentiment, in my opinion, has to get a lot more bearish before we can really expect, you know, a multi-month rebound in gold. So just be careful about using sentiment, you know, before you get too bullish. And we're going to end with this chart. This is the chart that I always use at the end of these video updates. And we have the bar charts, the weekly bar charts for GDX at the top, GDXJ below. And the miners have been trending lower in recent weeks. I mean, they bounced at the beginning of this week. They haven't really broken down. We haven't seen an accelerated sell-off yet because volatility has remained really low. But I think at some point in the weeks and months ahead, we'll probably see a volatility spike in precious metals. They're really ripe for that. I mean, with respect to gold, maybe that comes when gold breaks below 1,200. That's something to keep in mind. But now, getting into the details of these charts here, GDX has been trading in a descending triangle. And so a break below 21, that has a downside measured target of 1670 to be precise. And so that's basically the lower blue line. Not the first blue line is at the December low, which is in the mid 18s or so, but the lower one is in the high 16s, which we just mentioned. So again, very precarious situation with the miners. And GDXJ, their GDXJ has been also very weak in recent weeks. And I mean, if that breaks this little weak uptrend that it's you know, connecting the December lows and then the May lows, if it breaks that uptrend, first it will probably test the December low, and then it could go down to the 25 area, which perhaps coincides with the 16 to 17 target for GDX. So the price action in the miners has just been weak and bearish in recent months. There's really nothing that we can say that's bullish. And unfortunately, this this very long, large bottoming pattern that began 5 years ago, it will produce a massive, major breakout. But at this point in time, there's little chance it's going to happen this year, or even at the beginning of next year. I'd say probably in the second half of next year. That would be my guess, as these charts look like we're going to see a move lower over the next couple months in testing lower support levels. And so here and now, you want to stand aside from this market and you want to wait till we get more clarity. If we're right and things remain bearish, then you want to wait for things to break down and test those strong support levels while they are very oversold, and at the same time, while those sentiment indicators, which we talked about earlier, are at much lower levels. That's the time when you want to buy, because that's when you can see a very strong rebound like we saw in December. And that's all for today in this video. Again, you can follow all of my work at thedailygold.com. You can consider subscribing to my premium newsletter there. It's only $149 for 6 months. We focus on market timing and stock selection in the juniors. If you really want to know which juniors have the goods and the best potential, and which ones that we think are going to make a huge move when precious metals get back into a bull market, which we think is going to happen next year, sign up for our service. It's highly affordable. We'd love to have you. Thanks again for listening and watching, and I look forward to publishing another video update for you in the weeks ahead.